Good morning, David Kern here with the CBS AM Debrief for this Tuesday, the 5th of July, day after Independence Day, and which brings me to the US markets being closed for the yesterday's public holiday. So we have little lead from that part of the world, from the US at least. Some of the other Americas are reasonably positive up here, and saw a little bit of a mixture of results coming out of Europe, but the major ones are posting reasonable gains there. So the FTSE, the DAX, and CAC actually just down slightly. Madrid and Spain also off. Our futures, or rather our indices for our region for yesterday, reasonably positive. We were up 19.5 on the close, the Hang Seng up 1.66%, and the Nikkei up 0.98. That brings us to have a look at what the futures are suggesting for the States. Now this would be on Friday's close. We'll just check that. Yep. So we have fairly flat indication here at this point. Then we've got Toronto ended up, or is up, that's for the 7th, up 5, Mexico down 3, and the Vivespa, that's the consortium of the three exchanges down in Latin America, up 413. And that takes us now through to our commodities space. Similar picture there. Most of the major commodities quoted here are traded on the US markets, so we're not getting a lot of feed there, although Brent would be an indication clearly at $111.39. Agricultural there, apart from perhaps wool trading on the SFE, down 60 cents, a fairly big move there, down 4.04. Other than that, nothing really to comment on. Copper up just 4 cents on the close there at 6:11 p.m. Gold, fairly good move up here, $12.30. Silver up 39, and our currency pairs: euro buying about even, 1.4539. The pound buying 16092, and the yen, US dollar rather, buying 80.77 US dollars. The Aussie buying 107.36. US dollar buying 95.99 CAD, and just 0.8476 Swiss francs. So let's have a look at our economic calendar here for Tuesday the 5th of July. The big one for this morning is the RBA announcement, which is due out at 2:30 p.m. and of course wide consensus there. I think pretty much 100% consensus there is that will be left unchanged at 4.75%. Going through this evening, we've got some European and German PMI data out. Expectations all pretty much within line of the consensus there. Going through the factory orders for May out of the States, and then of course all eyes will be focused on this end of month non-farm payrolls, end of last month's non-farm payrolls at the end of the week, being the first Friday of the month. And it's suggested that some of the Japanese problems with the earthquake and tsunami may shake the jobs data up a little bit. So there may be a good reason to be looking at selling into Friday there, in case there is a bit of a shocker that comes through and gives everyone puts the frighteners on everyone and has everyone running for the exits there. So yeah, be prepared for that one. Okay, so keep this fairly short today, so there's really not that much to comment on, and just follow up with a couple of trades that I mentioned last week. One was Caltex here, which is actually doing a little bit better than I hoped. It's nearly put on $1 now. 11.88, actually got up above $12 yesterday during the session, so it has pulled back a little bit since then. We'll see if it continues to make its way up. $13 I would have thought would be a reasonable level to be looking at taking some profit off the table if you're in that trade. The other one which I'm long suffering in is Medusa. 654 does look like it's trying to regain some lost ground there, and it might have found a floor here at just above $6, but mind you, I said that last time up at 7 here, so we'll just have to wait and see on that one. And the other one that I quite like is something I saw in VectorVest, came up as a hold actually, but what I'm seeing there certainly, and you might be able to see this as well, is an ascending wedge type of pattern, and I think everyone gets the idea there. So as we keep banging up against this level of resistance here, we should get, potentially we're going to break out here as long as this inner upward trend line holds. If we get a break through this trend line, we know we're wrong, and we want to have a stop loss down here somewhere. If you do end up holding this one for a while, it is paying around 5% dividend yield. That's not franked, which is quite attractive, and there seems to be some pretty good value in some of the property development sector. So let's watch that one, but I quite like that particular trade at the moment. So I kept it short, so I will. Thanks very much, as always. Until next time, bye for now.